Welcome to the show designed to give you crypto confidence. Created by the marketing communications specialists at BlockSparks, we want to help you learn about cryptocurrency and blockchain in a safe and friendly place. Because we believe this stuff is far too exciting to leave it to the geeks. Come and join us to learn more. Hello and welcome to the Crypto Confidence Show. You only get me on my own today, and this episode should ideally be sponsored by a prescription decongestant brand, but it isn't, so I had to buy my own. Apologies if my voice sounds as strange to you as it does to me. But I wanted to talk to you today about a concept in digital currency which we bump into a lot, but can require a bit of explaining and understanding. That's the idea of tokenization. This is a fundamentally disruptive idea. Sorry, there's that word again, but it's true. The fortunate thing is the disruption is largely at the institutional level with relatively little impact on you as the user. If you like, tokenization is the disruption of money. So to appreciate this, we first have to understand exactly what money is. We all know what money is, right? Money can be understood in many ways, such as a store of wealth and value, and a way of accounting for things. Day to day, though, money is our means of exchange, and this makes it very different from other forms of wealth, such as property or jewellery, or other kinds of assets like bullion or stocks. But the money we use every day used to be pegged to the value of scarce resources, most often gold. Because gold was scarce, there were issues in storing it and transporting it safely, so eventually an industry called banking emerged, which guarded the gold and issued paper promises to circulate in its stead. This was far easier in everyday life, and everybody understood and believed in the valuable resource represented by the piece of paper. However, for many years now, the gold standard has been removed in most developed economies, and now the value of our money comes from the policies of the reserve banking industry, combined with the network effects of global usage. £1 sterling is worth £1 sterling, or about $1.33 today, because we all accept and agree that this is so. We call this fiat money, something like a banknote made legal tender by government decree. Many reserve banks still have gold bullion, but their currencies float independently of the gold price, and it's a matter of policy rather than preciousness, if you like, exactly what the banknotes in your wallet are worth. Of course, the world has other assets with real intrinsic value. In addition to precious metals, there are fuel, property, works of art, rare gems, even crop yields in the foods we depend on. But these are not easy to trade and exchange, to physically transfer or to subdivide. We say they are illiquid. Their value cannot easily flow from one bearer or location to another. It would be impractical or costly to transact with such things in everyday life for most of us. But what if we could unlock that value? What if we could fractionalize it transparently and securely? Blockchain-based tokenized assets are the answer. We have technology emerging now which enables us to quantify, divide and trade in tokens of real-world assets on an immutable and censorship-resistant public ledger. The implications of this are quite staggering. Tokens which denote real-world assets, similar to the promise printed on fiat banknotes but actually backed by something real. They're like shares of ownership in something physical. These are security tokens, and blockchain-based tokens are similar to traditional securities like stocks, which are traded digitally in the world financial markets every day. There's also some similarity to the process of securitization, where financiers bundle and slice fractional ownership of all sorts of assets. This has existed for hundreds of years, but it's not without its problems. Before the transparency of direct blockchain tokenization, securities could get completely separated from their connection with the real world, as in the 2008 financial crisis, when trillions of dollars worth of collateralized mortgage loans were securitized and then bought and sold from one institution to another, completely disconnected from their real underlying risk profile. That, of course, was the risk of a mortgage holder being unable to make their repayment, and we all know how that ended up. Therefore, the key challenge for any system that involves tokenizing real-world assets is to ensure that the digital token stays directly connected to the real-world asset. This is where the immutable, tamper-evident technology of the blockchain makes the difference, employing distributed ledger technology with smart contracts to directly quantify ownership and allocations in real time. Of course, this will in many cases need to be combined with robust off-chain due diligence to create a total system of real-world asset tokenization. Industries like real estate have complex legal procedures all of their own to adhere to. But it's the intersection of the two which makes things really interesting. That's because so much of the world's worth is tied up in static, illiquid assets. If we could tokenize it all and unlock it, just imagine the transformation. The world's total stock of financial assets, real estate and physical assets is currently worth more than 400 trillion US dollars. Real estate alone is valued at 217 trillion, all stuck in fixed non-liquid assets. Right now, to invest in any of that real estate is expensive, completely excluding access for most of the world's population. Even if you have deposit funds of around 20%, it can take months to contract and secure loans for the rest of it, and that assumes you have an A1 credit rating to work with, otherwise forget about it. Then bear in mind the average transaction cost just to buy any property is around 10%, so it would cost close to $21.7 trillion simply to liquidate the entire global real estate asset marketplace. After that, you're invested in a really stuck asset. Even if it's earning you income from letting and appreciation, you can't get any of the value out until you sell the whole thing, and that can take a while. So the potential of asset tokenization to free that value cannot be overstated. It will cause an instant redistribution of power in the world as liquidity increases and trade increases. And of course, it can apply to any asset, not just real estate. Consider, for example, equity in private companies. A share of a stock traded on a public stock exchange is valued more highly than a share in an identical private company because it's easier to trade the public stock. There are more market participants, greater volume, smaller spreads, and less price impact. This liquidity premium, which you could also describe as an illiquidity discount, can be as much as 30%. Simply tokenizing these kinds of assets will make a huge difference and will make investment fairer and more transparent. But think about all the other assets in the world, which are even more illiquid, yet contain so much more value. Imagine if an indigenous tribe could fractionalize returns on fuel mining on their ancestral homeland, a land forever secured in their name by a public smart contract. What if they could trade access to mining corporations in exchange for return on investment of the resources extracted and development of the infrastructure they need in their community, like medical centres or schools? Imagine a student band with a small but loyal fan following who want to spend their time creating and recording their own original music instead of playing covers of popular hits for tourists and wedding parties. What if, instead of selling their souls and their integrity to a record company, if they could find one, they could tokenize their music, their own art? If their fans could own a share in the creative output of the band and receive unique perks, such as special gigs and recordings unique to their community? And how about if all that value went directly to the musicians, instead of to a centralized platform which calls itself peer-to-peer, but ultimately controls the relationship and the transaction and all the content? Or imagine the value contained in the livestock herd of a nomadic family group who've never owned lands of their own, but have cultivated their rare breed stock for generations. What if they could tokenize that livestock itself and release capital to send some of their young people to university to study breeding and veterinary techniques, to improve the herd further and bring long-term security to the lifestyle of their people without sacrificing their tribal lifestyle and acquiring real estate they didn't want in the first place? So you can see the potential extends far beyond the measurable book value of tangible assets. And it's only when you start to realize how massive the reach is that the mind-blowing extent of the potential disruption becomes apparent. So our brave new tokenized world could look very different to the one we presently live in. For example, we've been talking about the sharing economy for more than a decade now, but it's been something of an illusion, based around centralized corporations which control the platforms and take a big slice of the profits. Decentralized ledgers redefine sharing, so the very concept of ownership is going to need shaking up. Instead of getting a loan to buy a house, it might make sense to buy a basket of real estate tokens and properties around the world. It can be better to diversify in a volatile marketplace. Or if I own my house, perhaps you could buy a few shares in it, so I can release capital to invest in something else or for my living expenses. I could tokenize my house, and instead of making mortgage payments, I'd make payments to the network of token holders. Tokenization will create new ways to organize and act collectively. Perhaps a community of small donors will acquire a piece of art for their local museum through a token sale, even though none of them could afford to buy the painting individually. The difference between this and current crowdfunding models is that the token holders will retain real fractional ownership of the asset. Of course, we're going to need new contract law to accompany all of this, loads of off-chain work to be done, but the asset ownership will be clear and transparent on the blockchain itself for anyone to inspect. Now, when I talk about tokenization and shared ownership, I don't mean some kind of communist collectivism, but true control over how assets are allocated and distributed. By removing middlemen and embedding both execution and legality within smart contract code, tokens make it easier and cheaper to divide assets into fractions and lower the cost of global transfers of ownership. Ownership of tokens will be complex because present law makes a distinction between assets that are fungible and those that are not. A fungible item is one that can be replaced by another identical item, in the way that a dollar bill can, or a ton of crops, or a bar of gold, or a barrel of oil. Fungible assets are much easier to convert to tokens because they can generally be broken down into smaller units, like grams of gold in a bullion bar, and a token can stand for a group of objects, like a pile of gold. It's different for non-fungible things with variable intrinsic value. A token couldn't easily stand for a set of individual objects like a warehouse full of unique works of art. But the processes and protocols will catch up eventually and shift our mental picture of what owning something actually looks and feels like. Governance models will need to evolve. If 100 people collectively own a property, who ensures that it's maintained and secured? And who has the right to live there and use it? If 10,000 people own fractions of the building, none of them can even monitor this in a way that wouldn't exceed the costs of their investment. So although the blockchain smart contract provides for the asset tokenization itself, new security solutions will need to be created off-chain to address the physical aspects of the assets involved. But it will be worth it, because liquidity is the fundamental reward for unlocking all this value. Rather than thinking in chunks and units, we'll start to see value as something which can truly flow from one owner to another, from any location to another, without barriers or friction, and without value leaking away to those trusted institutions and third parties. Then we'll truly have a peer-to-peer exchange of value. And a successfully tokenized economy is all about inclusion. Indeed, it needs mass adoption to work. If a token is thinly traded, it's going to stay relatively illiquid. But because the tokens are highly divisible and move digitally around the world fast, the potential market is truly global. More participants means more market depth and more trading for everyone. No KYC, no qualified investor status. Indeed, it's not limited to those who are included in traditional banking markets, who have typically recognized consumer credit scores, or who have assets in specific currencies. So many people fall through the cracks and are excluded from the financial behaviours we easily take for granted, and the value they bring to the world, to their communities, is lost to the economy. Further inclusion will take place if we can tokenize the value of unrecognized assets such as homemaking and childcare. Perhaps these tokens could be used by some of the poorest and most disempowered people in the world as collateral for micro-business loans and a real opportunity to create change in their lives and communities. The potential, when you start to think about it, is just incredible. So, I've talked a lot about the ways tokenization could make the world a better place. However, the reality is that we do have a long way to go for the infrastructure to come together to make this happen in the real world with sufficient network effects. It might take years or even decades to be truly manifest. But tokenization is evolving and it's happening. Today you can buy REITs, real estate investment trusts, in which you can take shares in a portfolio of property, which has been compiled and managed by a central company. As I say, we're not quite there yet. But it demonstrates some of the potential. It's not transparent, you have no control, and the barriers to entry are high. But there are real estate companies now starting to use blockchain solutions. And you can buy gold using digit tokens, an Ethereum-based protocol, which is much closer to true digital asset tokenization. Digix uses a proof-of-asset protocol to certify the chain of custody of the actual bullion, creating asset cards certifying the vendor, custodian, and auditor, written into the Ethereum blockchain. And the Digix DAO is exploring new applications for this model going forward. So we do have a lot of the technological infrastructure in place, at least conceptually, or it's emerging, to do what's needed. The blockchain is ready, fast internet is reaching more of the globe daily, and mobile connectivity is exploding with the 5G revolution just around the corner, scaling up the speed of the distributed ledger exponentially. But whilst tokenization and technology can change quickly, social institutions and regulatory frameworks don't move at quite the same pace. The tokenisation of traditional assets represents one of the greatest challenges that the SEC and other global regulatory agencies are facing this decade. There's much to keep the lawyers busy for a long time, so don't worry about them. Tokenising real-world assets creates challenging problems requiring innovative solutions, which will need to go beyond technology. In some cases, it's going to require legal reform. In other cases, it will involve clever combinations of existing rules, new business structures, new digital token systems. But with positive interest from the IMF, the G20 and regulators around the world, and governments themselves increasingly adopting blockchain-based solutions, we can see that the ground is shifting. The realities are responding. Some of the brightest minds are actively seeking creative solutions to all these challenges, and disruptive change is most definitely coming. So I'm not even going to apologise for using that tired old word. It's going to be very exciting. There's so much more going on in this space than stressing about crypto prices. Smart people are building, creating, and thinking about amazing things. We've talked a lot about different ways to learn about blockchain and cryptocurrency on this podcast, and learning is essential because there is such a lot out there, so much amazing work going on in new technology, and it's really fast moving. It's easy to get a lot of learning from freely published information, articles, Medium posts, blog posts, podcasts like this one. It's all out there for the taking, and you can learn so much. Quite a lot of the information that you find in these short form, intense kind of formats can be quite ephemeral because situations are changing all the time. And we also really love, here at Blockspots among the team, diving into a good book. Books seem to represent something more long-term, more lasting and evergreen. I know that for me, understanding a lot of the real intrinsic principles to this stuff has come from books. And that's the reason for this brief announcement today, because we want to do a special edition of this podcast for World Book Day in April. I'd love to hear what books you have learned from and really enjoyed in this cryptocurrency space. So if you have time, what I would really love you to do is send me a quick voice memo so we can include it in the broadcast. Just tell me the book you like, who wrote it, and one thing that you learned from it, one reason you would recommend it to others on World Book Day. I think it's essential that amongst all the shorter term content that we consume all the time, that we do remember the role of books in learning and make sure that this doesn't escape from the space. I'm really looking forward to sharing my favourites and also to hearing about yours. I is for ICO. ICO stands for Initial Coin Offering, and this is a way in which new cryptocurrency projects can raise funds to launch their business by selling their own crypto tokens. It's a bit similar to the way investors buy shares in a company through an initial public offering, but it's got some important differences, not least the fact that ICO tokens can usually only be bought using Bitcoin and Ether, although some projects have found ways to offer fiat currency payment gateways. ICOs are controversial for a number of reasons. In 2017, they were a great way to raise money fast. You could pretty much tokenize anything and have investors throw money your way. And only a small fraction of these turned into viable businesses in the end. This was for a range of reasons, including a significant number which were outright scams who simply took the money and ran. The lack of regulation and sheer hype involved made it easy to rip people off. Others failed because they couldn't deliver technologically, or the idea itself was just less viable than they had thought. In 2018, as prices fell, still others were the victim of market forces and poor business or treasury management, especially if they raised a great runway of funds in February prices but left all of it in ETH, meaning they couldn't pay their developers by September. Anyway, the ICO itself as a funding mechanism is basically a kind of crowdfunding, and as such they democratized access to a wide range of investments for everyday retail backers to get involved in. A chance to support initiatives and ideas you could get behind ideologically as well as speculatively. The risk, of course, for investors is that all the money was raised up front, in most cases before anything was actually built. So, hugely risky. Never before have pre-product startups been able to raise this much money from all over the world in such short time frames. Aragon raised around $25 million in 15 minutes. Basic Attention Token raised $35 million in only 30 seconds, and Status raised $270 million in a few hours. Now they're laying off staff. And all this off the back of products that didn't even exist, and in exchange only for a token which might one day have intrinsic value, as opposed to any equity in the company itself. And just as with the technology, regulation has always lagged behind what was happening in the ICO marketplace. So no one should be surprised that it's finally catching up. In the US, the Securities and Exchange Commission views many tokens as unregulated securities, which are subject to a number of very strict investment regulations. ICOs therefore exist in a grey area legally, because arguments can be made both for and against the fact that they're just new, unregulated financial assets. Google the Howey test if you want to dig into this further, but recent SEC decisions have made a clear distinction based on the token type. In some cases, the token is simply a utility token, meaning it gives the owner access to a specific protocol or network, thus it may not be classified as a financial security. But on the other hand, if the token is an equity token, meaning that its purpose is to appreciate in value, then it starts to look a lot more like a security, and as such must be subject to the same kind of regulation. A new wave of security token offerings, which are much more tightly regulated and difficult to invest in, is going to be one outcome, something we'll see a lot more of as 219 unfolds. A lot of ICOs have muddied the waters further by declaring that there definitely are pure utility tokens, but excluding US citizens as investors on a just-in-case basis, fearing retroactive legal action. Meantime, many projects are now offering ICOs at a later stage, raising seed funding first through private equity sales in order to create a minimum viable product. They might want the community access and involvement of a public sale through an ICO, but they're coming to respect that people are no longer throwing money at anything with the word blockchain or crypto in the title. They want to see a proof of concept first. So there continue to be amazing ideas coming forward and some projects working to create products which will be world-changing. But in this area more than anywhere else, you must research carefully. Really do your homework. We'll put some links in the show notes to help you know what to look for, but there's no substitute for digging in. We've seen some incredible projects involving amazingly talented people and some really exciting outcomes, but you have to be so careful. Read primary sources. It's vital to realise that anyone recommending the project who's not directly involved is probably incentivised to do so, and more than likely, they're incentivised with tokens in the project itself, so you can't regard anything you read as neutral. And that's before we even get into the murkier world of paid celebrity endorsement. Remember, every investment is speculation. Some ICOs have the potential to do amazing things for the world and could make you serious money too, whilst others will go straight to zero, whatever happens in the established crypto marketplace. Keep an eye on the ICO space as 2019 unfolds, as we'll see more opportunities, more variations, sadly undoubtedly more high-profile failures and scams as well. It's certainly going to be an exciting time. Thanks for listening to Crypto Confidence. If you like what you hear, please do consider leaving us a review via your favourite podcasting app and joining the conversation online in whichever way you prefer. Full contact details are in the show notes for this episode. And remember, nothing in this podcast or our related social media, nor anything else published by BlockSparks OU at any location, is intended as financial, investment or trading advice. Everything we write or say represents our personal opinions for your information, education and entertainment only. You should not make any decisions based on anything we share with you, not without undertaking independent due diligence and consultation with appropriate professional advisors. Crypto Confidence is all about being smart and informed and making the right choices for you.